Right now, behind the closed doors and in front of flashing cameras, Trump is orchestrating a new wave of tariffs, more aggressive, more targeted, and aimed straight at the global supply chain. The markets are twitching, currencies are tightening, and the storm isn't coming. It's already forming on the charts. And if you know where to look, you can turn that storm into your playbook. These tariffs won't collapse the Forex market. They'll reveal exactly where your opportunity is. Every move Trump makes sends a ripple through global currencies, and those ripples can be traded with precise precision. By the end of this video, you'll know how to position yourself for the next largest move in financial history, like Brexit. And if you do not know what Brexit is, I'll be posting a video in the upcoming weeks on exactly what Brexit was, what it did, and how you can gain value from it. Trump just hit China with over 100% tariffs. Not a headline stunt, but a direct economic assault. It's already pressuring the Chinese yuan, pushing capital into safer currencies, and setting the stage for a shift that hits deeper than stocks ever will. This is the kind of move that doesn't just echo in headlines, but it's gonna build momentum on the charts. While most traders watch equities panic, Forex is where the real response happens first. Because when two economies clash, it's not earnings that react, it's the currencies. The USD, the Chinese yuan, is already making aggressive moves. The AUD, JPY, and other Asia-exposed currencies are starting to lean. This isn't theory, this is live market movement. And if you trade Forex, you're already in the middle of whether you know it or you don't. What makes the moment rare is the clarity. China's under direct pressure while other nations are completely untouched. That asymmetry creates clean opportunity for traders who know how to read structure, spot imbalances, and move with conviction before retail catches absolutely on. This isn't noise, it's a setup. The volatility we're seeing right now, it isn't random, it's actually quite predictable. And the traders who understand how macro shifts drive currency movement are able to get one of the cleanest windows they've seen in months. So if you're in Forex or trying to figure out how to actually win in it, this is one of those moments where everything completely slows down. If you know how to see it, let me show you how to do this. Let me show you how this actually plays out. China, they get hit with 145% tariff. That means they're gonna sell less stuff in the United States because it's way more expensive now. So if they're selling less, they're earning fewer US dollars, which is a big deal because China uses those dollars to keep their economy flowing steadily. And when the fewer dollars come in, their currency, which is the yuan, starts to slip down. And here's the thing no one's saying out loud. A weak currency makes their exports cheaper. Sure, but it also makes everything else harder. Investors, they pull their money out. Import costs, they're gonna rise. The confidence drops. And you start to see the pressure show up in the currency pairs like USD, CNH. Not in a week, but in real time. That's why macro traders love this kind of setup. Not because it's chaotic, but because it's predictable. It's pressure, and pressure is gonna leave footprints, and they're gonna be big. Now, over in Europe, it's a different kind of pressure, but the same reaction. Trump floated a 20% tariff on European imports. It's paused for now, but the damage is already seeping in. The businesses, they're completely bracing. The markets are nervous, and when that kind of fear starts to build, it usually pushes the European Central Bank to step in. If they cut rates or start printing more money, the euro is gonna drop. It's very simple. And that makes Euro USD one of the most obvious pairs to watch right now. Currencies don't move because of guessing. They move because governments make moves that force economies to adjust. And every time that adjustment starts, Forex traders, they get the front row seat. Forget the S&P, forget earnings calls. Forex is the fastest market in the world to respond to with this kind of pressure. And you want to be early. And this is what early looks like. The headlines will catch up later. But if you're watching the currencies and what they're doing now, you're already being in a position by the time everyone else actually starts reacting. And that's the edge right now. Most people are still watching CNBC, waiting for their confirmation. But in Forex, the confirmation is already here and you're looking at it. Spreads are widening, the momentum's building, and volume is flooding into the majors. That's the signal. That's your opportunity. This market doesn't reward hesitation. It rewards the traders who see range and know how to actually trade it. The tariffs hit, volatility surges, and you've got the real movement that's measurable, repeatable, and tradable. That's how Forex turns pressure into actual profit. Every time policy shifts like this, Forex doesn't get noisy, it gets loud. You'll see the candle stretch, you'll see liquidity gaps, and you'll see pairs that usually crawl start sprinting. That's not hype. That's what happens when money is getting nervous. This isn't about the dollar, it's about the relationship between every major currency that touches the US trade. The Australian dollar, the Canadian dollar, the Chinese yuan, the Japanese yen, and the euro. Every single one of them is recalculating value in real time. And that recalculation shows up in the volatility spikes and complete trend flips. That's not news cycles. That's what you're watching unfold right in front of you. Think about it. A policy decision creates imbalance. Imbalances, they create range. And range is going to create your setup. You're not predicting the market. You're actually reacting to the pressure that it's already under. You don't have to guess who's winning politically. All you have to do is watch who's bleeding economically. You'll know where the pressure is by how the chart is going to behave. The peso starts sliding. It's not a glitch. That's Mexico adjusting to the external risk. USD JPY starts running up. That's Japan bracing for currency intervention. The Australian dollar pulls back. That's a reflection of China's slowdown echoing into Australia's export market. You don't need a PhD to catch these kind of moves. All you need is a chart and some patience and the awareness to act when momentum lines up with the macro picture. You risk $100 with a very tight risk, and if you're in sync with the pressure, that same trade can deliver outsized returns. Because when volatility's that high, one clean breakout does the work of 10 forced entries. Forex isn't about trading everything, it's about knowing where the pain is and trading directly through it. That's why this is called asymmetric opportunity. Low risk, high range, very short time frame. You're not playing the retail game anymore. You're using global imbalance to move with conviction. That's what the macro flow gives you. And this is the moment that it's most alive. This isn't a market waiting to react, it's already reacting. You just have to step in while the setups are still fresh. In the next section, I'll show you exactly what I'm watching, which pairs matter, and how to take advantage of this window before the rest of the world decides to wake up. This is the part where most traders blink. They see volatility and they hesitate. They wait for someone to tell them what just happened. But by the time they get their answer, the move, they've already happened. This is where you decide who you are as a trader. Because what's happening right now in the Forex market, it's not noise, it's not random, it's pressure, raw, deliberate, and directional. Trump isn't making guesses, he's playing chess. These tariffs aren't about short-term drama. They're strategic pressure points being applied to the biggest economies on the planet. And that pressure shows up in the only place that doesn't lie. You wanna know which countries are struggling the most? Watch how fast their currencies collapse after a policy shift. Look at the spacing on the candles. Look at the volatility around the sessions. You'll see liquidity gaps, reaction wicks, volume swings. That's not an accident, but because the money isn't trying to escape tension. This is where retail traders are getting it wrong. They're looking at price like it's just a number, but real traders know the price is just psychology stacked in a real time. And nothing reveals psychology faster than a macro disruption. If the peso drops 150 pips after a US tariff hike, it's not a story. It means investors are pricing in pain. And if you know how to structure your entries, you don't just survive that pain, you can actually monetize on it. The Euro USD, the USD Chinese yuan, the USD JPY, these pairs aren't just moving, they're signaling. They're revealing how global pressure is reshaping capital flow. That's what Forex gives you that no other market will. A front row seat to economic reality with tools to trade their reaction. We're not waiting for confirmation anymore. The confirmation's already printed. You've got structure, you've got momentum, and you've got liquidity behind the move. Now it's about risk, your precision, and discipline. You don't need to know if the economy is strong. You don't need to know if the Fed is bluffing. You just need to know this. When governments apply pressure on currencies, they're forced to move. And that movement is gonna create space. And that space is for you to enter, to exit, and to win a trade. This is what asymmetric opportunity looks like at scale. You're not scalping crumbs off the weak setups. You're taking high conviction entries while the markets are being forced into an imbalance. That's not a theory, that's your edge. And the deeper truth, this isn't even about Trump. This is about what happens every time global policies get shaken up. Forex becomes the first responder. It reacts instantly, and if you're in position, it's gonna pay instantly too. I'm not watching this like a spectator. I'm breaking down every pair, I'm timing my entries, and I'm watching the different sessions, and I'm adjusting my size. This isn't chaos, it's an opportunity wrapped in crazy amount of volatility. I don't need all the green candles. I just need a clear setup. I need a direction, and right now, we've got both of them. And if you've been waiting for the perfect market, well, wake up. It's right here. It's right now. But be calm in it. What do Trump's tariffs mean for Forex traders? It means we're standing in the middle of the clearest macro setup we've ever seen in years. The world is shifting fast, and the currencies are responding even faster. And if you're still on the sidelines, you're not just missing the trades, you're gonna miss your moment. We broke it down. Tariffs aren't just about politics, they're pressure. And in Forex, the pressure equals movement. And in movement equals your ability to make money. This isn't the time to play small or wait until it calms down. This is the kind of moment that's gonna define traders, the ones who hesitate and the ones who see the shift and step in. So if you got value from this video, please hit that subscribe button. And I'm gonna see you guys in the next video. Until then, peace.